Last week, I almost fell out of my chair when I saw an analyst give Aduro Clean Technologies a price target of $50 per share, while the stock price is only trading for $5 per share. Analysts are usually conservative. They are afraid to give price targets that are so high in relation to the stock price. Then I heard some investors say, "This is too good to be true." After you watch this video, you will understand why I actually think that the analyst is still too conservative. In this video, you will learn about Aduro's business, the analyst's conclusions and assumptions, and why I think the upside is much bigger than 10x. My name is Mariusz Konieczny, and I've been investing in the stock market full-time for 16 years. I'm also the founder of microcapexplosions.com. Because I already made a video about Aduro Clean Technologies, I'm going to be quick. I suggest that you watch this video for more background on Aduro. Aduro Clean Technologies is a publicly traded company that addresses one of the biggest problems of humanity today: plastic waste. Aduro has the technology that can successfully recycle plastic by turning plastic back into the ingredients that plastic was made from. In other words, plastic circularity. This is a big deal for oil companies that produce plastic, because if they don't find a plastic recycling solution, they will face penalties, get sued like ExxonMobil was sued by California, and even their entire plastic production business might get shut down. Aduro is now commercializing this technology, and more than 10 multi-billion-dollar companies are testing it, including Shell Oil and Total Energies.
What we have at this moment is that we have easily 10 petrochemical houses that have shown interest.
The company will generate revenues in two ways: by owning their own plastic recycling facilities, and two, by licensing this technology to others. On March 6, 2025, Jesse Sobelson, an analyst from D. Boral Capital, initiated coverage on Aduro Clean Technologies and gave it a price target of $50 per share. This is 10x from the current stock price. This is almost unheard of. Analysts sometimes give price target of 100 or 200% upside, but not 1000%. I suspect that the stock price would have gone up by a lot after this report came out, but now everybody is worrying about recession and the stock market sell-off. To arrive at the $50 per share price target, the analyst used a 10-year discounted free cash flow analysis, which yielded a value of $63 per share. Then he also used discounted earnings per share analysis, which yielded a value of $37 per share, and the $50 valuation was the average between the two numbers. He also compared Aduro to competing technologies. He said, "Aduro technology is truly unique versus others in the plastic recycling space, as it is the only one under our purview that is able to operate with generally resin agnostic feedstock." It is also worth noting that one Aduro competitor, PureCycle, has more than 10x the market cap of Aduro. Meanwhile, PureCycle can only recycle one specific plastic type, while Aduro can address many more plastic types, meaning it's actually more effective. Why 10x is too conservative? While a 10x price target by an analyst is fantastic, I believe that it is too conservative. Why? In the report, the analyst says, in aggregate, we arrive at $875 million in revenue in 2035. This equates to 2.5 million of processed tonnage compared to our 567 million tons estimate for 2035. Only 0.5% of total plastic annually produced that year. In other words, he's saying that even though the world will produce 567 million tons of plastic in 2035, Aduro, with its amazing plastic recycling technology, will only capture 0.5% of it. 0.5%? Really? He says that Aduro has no direct competitors. He says that Aduro can recycle feedstock that no other technology can touch. And at the same time, he's making an assumption that Aduro will only capture 0.5% of a massive global problem. If we want to make a dent in the plastic problem, then Aduro will need to capture way more market share than 0.5%. And the analyst himself used the language that this is a drop in the bucket compared to the total plastic production. Another reason why the $50 price target is way too conservative is because the revenue assumptions are too low. Aduro's process works as follows. You take plastic waste, you run it through the recycling facility, and then you sell the finished product like plastic resin. The analyst used virgin plastic prices. Well, Aduro always assumes that its product has to be sold at a price competitive to plastic resin made from oil. It is nice to be conservative, but this is not what's going on in the marketplace. Recycled plastic is a premium product because there are shortages of recycled plastic and demand for them is growing. Companies pay premium prices for recycled plastic because it makes them look good. Here's what a competitor, PureCycle, said about pricing for recycled plastic versus virgin plastic on the most recent conference call.
And it's also important to note that this is not a commodity polypropylene market that we're operating in. We are a specialty product. We operate in a different market, and it's quite disconnected from virgin.
Let's move on to gross profit margins. In the report, the analyst is projecting 55% gross profit margin for Aduro's own units. In other words, for every $100 in revenue, Aduro has to pay $45 for plastic waste as the cost of goods sold. Well, right now, waste management companies charge money to take plastic waste, especially plastic waste that is hard or impossible to recycle. Are you telling me that Aduro will have to pay somebody else money to take their plastic off of their hands? No, Aduro can process plastic waste that no other technology can touch. More realistic scenario is that Aduro will get the plastic waste for free or get paid to take it, not the other way around. Under such a scenario, the cost of goods sold doesn't exist or it's reduced significantly. Finally, the 2035 projected revenues of $875 million are divided into $475 million from Aduro's own plants and $385 million from licensing the technology. That's only considering one vertical, advanced chemical recycling of waste plastic. But Aduro's technology addresses other verticals as well, like heavy crude oil or bitumen. This is an additional $50 billion total addressable market vertical, and renewable oils is a $121 billion total addressable market vertical. These two combined are bigger than the plastic vertical that the analyst is referencing. They are not included in the revenue calculations at all, but together they could be worth another $50 per share. Even though I think that the analyst's estimates are too conservative, let's use his numbers to estimate where the stock price could be in 2035 or 10 years from now. I will only change one variable, which is the PE ratio. According to the analyst report, with $875 million of revenues in 2035, the net income should be $400 million or $10 per share. The analyst used a PE ratio of 15. This is the variable that I'm going to change because I think it's way too conservative. The analyst told us his revenue and net income is based on Aduro getting 0.5% of the market share. This tells me that there's plenty of growth left. Fast-growing companies get ridiculous PE multiples. Tesla, PE of 108. Nvidia, 36. Hims and Hers, 65. So I don't think it would be too crazy to assign Aduro a PE ratio of 50 on future earnings per share of $10. That's $500 per share stock price, or 100x from the current stock price. Also, remember, all these calculations include only one vertical. The other two verticals are completely ignored. Remember, there is a reason why I own 1% of Aduro. What do you think? Is the PE ratio of 50 too high or too low? What PE would you use instead? Let me know in the comments below. Thank you for watching. Don't forget to subscribe to this channel, like the video, and click on the notification button and sign up for my newsletter below for more investment opportunities.